Every decade, there's one stock that turns normies into wannabe Wall Street wizards. One ticker that convinces everyone they're the next Michael Burry. For Gen Z, that stock was Nvidia. From parabolic rallies that felt unstoppable to brutal crashes that humbled even the most diamond-handed bulls, Nvidia didn't just ride market cycles, it defined them. But what really caused Nvidia's most insane rallies and its nastiest faceplants? And how can short-term traders read the signs before the next big move? Let's break down the most legendary boom and bust cycles in Nvidia's history and the exact technical indicators that told us what was coming before it hit. Welcome to Tendie Insights, where we cut through the noise and dive deep into the data that actually matters. Nvidia went public in January 1999. And boy, did it pick the worst possible time to show up to Wall Street's party, just as the dot-com bubble reached peak irrationality, the boom. By mid-2000, NVDA exploded from just $1.43 to nearly $6. Split adjusted, that's a 320% gain in less than 18 months. The bust. Then came the crash. As tech optimism evaporated, NVDA tanked 80%, settling near $1 by 2002. What caused it? Retail euphoria, irrational expectations on GPU demand, Nasdaq peaking in March 2000, poor visibility into tech profitability, technical indicators, RSI, Relative Strength Index, spiked above 80 before the collapse, classic overbought signal, MACD crossover, bearish crossover in mid-2001, volume divergence. Price kept rising while volume dried up. Traders missed the distribution phase. By 2007, Nvidia was finally maturing. Gaming GPUs, mobile chips, even early AI murmurs. But macro doesn't care about potential. The bust, from $18 down to $5 in 2008. A nearly 70% wipeout. Why? The causes. Lehman Brothers collapse. Credit markets freezing. Semiconductor demand collapsing. Retail capitulation. Technical breakdown, 200-day moving average, 200 DMA. Price broke below in September 2008 and never recovered till mid-2009. Death cross, 50-day moving average crossed below 200-day moving average. Fear index, VIX, spiked above 80. Extreme volatility, your exit zone for short-term traders. Lesson, fundamentals don't matter during systemic panic. Use technicals to protect capital. But after barely surviving 2008, Nvidia didn't just rebuild, it evolved. And by 2019, it made a quiet move that would set the stage for the AI revolution. Before the AI hype train left the station, Nvidia made a move that would quietly reshape its long-term strategy, the $6.9 billion acquisition of Mellanox Technologies in 2019. Why it mattered? Mellanox specialized in high-performance networking. Think ultra-fast data transfer between servers and data centers. This wasn't about gaming GPUs. This was about infrastructure dominance. Impact on NVDA broadened Nvidia's exposure to the data center market, gave it a stronger enterprise foothold, set the foundation for future AI compute clusters. Investors loved the vision shift, from GPU maker to platform leader. The boom NVDA surged from $150 in early 2019 to nearly $300 by early 2020, a near 100% gain in a year, even before the pandemic rally. Technical indicators to watch. Bullish gap up on deal finalization in April 2020. Ascending triangle breakout pattern. Volume spikes on Mellanox-related press and earnings calls. This wasn't just a GPU rally. This was the first time gamers and miners teamed up to drive Nvidia's sales through the stratosphere. The boom, from $30 in early 2016 to over $280 by late 2018, a mind-blowing 830% gain. Miners were bulk buying GPUs to farm Ethereum. Nvidia couldn't keep up with demand, and neither could investors. The bust, crypto winter hit. Ethereum crashed 94%, Bitcoin dropped 85%. Nvidia's revenue cratered, and so did the stock. NVDA fell 55% in just 3 months. What caused it? GPU shortage turned into oversupply. Crypto prices collapsed. Channel inventory mismanagement. Over-reliance on volatile mining revenue. Technical indicators. Parabolic price action. Unsustainable vertical climb. Volume blow-off. Huge spike in late-stage buying. Head and shoulders pattern, formed in 2018 before the crash. Gap down on earnings, clear breakdown signal for short-term traders. Pro tip, parabolas always end in pain. If you're seeing triple-digit RSI on the daily chart, It's probably not a buy the dip moment, global chaos, economic shutdown, but for Nvidia, opportunity. The boom from $55 in March 2020 to over $330 by November 2021, a 500% rally during a global pandemic. Why? Surge in gaming, explosion in data center demand, AI hype plus remote work equals bullish tailwinds, insane fiscal stimulus plus retail FOMO, the bust, then the Comedown. NVDA dropped 66% over the next year as rates soared and growth stocks got wrecked. What caused the crash? Fed rate hikes, inflation panic, valuation concerns, PE over 100 plus, retail exhaustion, technical indicators, triple top pattern, 2021 resistance held multiple times, MACD bearish divergence, break below 50 DMA and 200 DMA, high short interest building post-peak. Note to traders, when valuations go full fantasy mode, watch for any MACD or RSI divergence. They often precede violent corrections. By the way, if this breakdown is helping you see through the hype cycles and spot the landmines early, hit subscribe and like. Helps us stay sane in the madness. In September 2020, Nvidia announced it would acquire ARM holdings from SoftBank for $40 billion, the biggest semiconductor deal ever. Analysts screamed game changer. Investors went full euphoria mode. NVDA stock surged over 130% during the height of the deal buzz. The boom. Nvidia shot from $120 to over $300 in less than a year. ARM exposure meant domination in mobile, IoT, and licensing. Bulls priced in future monopoly-level control of the chip stack. The bust. But it never happened. After massive regulatory pushback from the UK, EU, and FTC, Nvidia walked away in February 2022. No ARM, no $40 billion empire expansion. The market reaction. Investor sentiment cooled. Nvidia's stock declined steadily into its 2022 lows. It was the start of Nvidia's descent into the great AI hangover. Technical indicators. Double top formation between $330 and $340. Negative MACD divergence. High volume sell-off post-deal termination. Retail investors thought the party would never end, but Nvidia woke up with a brutal hangover. The bust, from $330 to under $110 in 2022, down 66%. Again, key drivers: global chip glut, PC demand falling off a cliff, crypto mining demand dying, margin compression plus analyst downgrades, broad tech correction, ARKK, Meta, Amazon, all tanking, technical indicators, bear flag breakdown, classic continuation pattern, price rejection at 200 DMA, oversold RSI under 30, but didn't bounce immediately. Inverse cup and handle forming before breakdown. Just when the bears got comfortable, the mother of all rebounds began. The boom, from $108 in October 2022 to over $950 by March 2024. That's an 800% rally. Again, why? ChatGPT hype, GPU demand explosion, Nvidia, picks and shovels of the AI gold rush. Record-breaking earnings. Market crowned NVDA the king of AI infrastructure. Technical signals. Golden Cross. 50 DMA crossed above 200 DMA in January 2023. Massive volume spikes during earnings beats. Strong Bollinger Band riding. Clear breakout above all-time highs with confirmation volume. But also, warning signs were there. RSI greater than 85 multiple times. Price 2 times above 200 DMA. Unsustainable. Valuation greater than 30 times, sales equals red flag. Everyone was long, and that's the problem. After printing $950, Nvidia hit turbulence. The bust, from $950 to $700 to $75, a sharp 20% drop in just a few weeks. What triggered it? AI revenue deceleration whispers. Insider selling ramped up. Hedge fund rotation out of semis. Valuation finally caught up with reality. Technical breakdown. Bearish engulfing candle post-earnings. Gap down on volume equals institutional exit. Triple RSI divergence from November 2024 to February 2025. Break below rising wedge pattern. Trader tip. Rising wedges almost always break down, especially at euphoric tops. Whether you're long-term or short-term, understanding Nvidia's boom and bust cycles is everything. Key technical indicators. RSI zones. Greater than 70 equals caution. Less than 30 equals potential rebound. MACD crossovers, momentum shift signals, moving averages, 50 DMA for short-term, 200 DMA for macro trend, volume confirmation, no breakout is real without volume, price to sales ratio, PS, watch if it exceeds 30x again, earnings, reaction, post-ER price action is more important than the actual numbers. Golden rule, if everyone's already bullish, it might be time to start thinking like a bear. So, the next time your friend tells you Nvidia is a can't-miss AI play, ask him if he held through the 66% drawdown in 2022 or the dot-com collapse. Spoiler, he didn't. If you want to survive the next Nvidia cycle, or maybe even profit from it, hit that subscribe button. Tendie Insights doesn't sell hopium. We just break it down cycle by cycle.